The gold miners have to announce their earnings pretty soon, and they will have sold a lot of gold at very high prices. So some of those earnings are going to be pretty nice. And that's part of why people are buying the miners now, because they're anticipating some better than expected earnings reports. So here we go.
Yeah,
And by the way, the miners in this kind of a bull market usually do extremely well. And what also does really well is silver. In the last year of a precious metals bull market, silver goes straight up and its percentage gains double gold's at least. So this might be a time to be buying some silver if you don't already have a big, nice stack.
Silver's outlook remains bullish despite rivaling gold's rally in 2024. The average silver price prediction for 2025 among leading experts is bullish. Major banks such as Citibank and TD Securities have raised their benchmark to $40, while others, such as JP Morgan, aren't far behind, with a $38 expectation. The LBMA, most closely linked to the market, forecasts silver to hit $45 an ounce. Former Wall Street financial analyst John Rubino anticipates strong earnings for gold producers due to rising prices and highlights silver's historical tendency to outperform in late-stage bull markets. He states that the recent gold spike sparks renewed momentum in mining stocks. While gold miners have consistently demonstrated leveraged price action relative to spot gold, evidenced by a beta of 1.65 over the past 20 years, their actual price performance has lagged significantly. Investors who held gold would have seen their investment more than sextuple, whereas a broad index of global gold miners has struggled even to double the initial investment. Analysts said higher labor costs and sticky inflation could continue to weigh on gold miners' profits into 2025, but soaring prices of the yellow metal should still boost free cash flow. In his analysis, Rubino emphasizes the mounting U.S. debt and surging interest payments, which caused an unavoidable financial crisis and acted as primary drivers behind the gold rise. He anticipates that a potential Trump presidency would usher in loose monetary policies to strengthen gold's appeal. Gold's strong performance over the last 2 years must be seen as an acceleration in the deleveraging of the global financial system. After many decades of inordinate credit creation, leading to excessive debt levels, asset bubbles, and too much monetary interdependence between nations, the financial system has started to heal itself through a rising price of gold. The gold price will continue to rise in the years ahead until stability is restored. While reflecting deepening financial uncertainty, Rubino points to the significant outflow of gold from London to New York, straining futures markets. Now we present the clips of John Rubino's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Gold is rocking now for two reasons. One is that, three reasons. One is that it's baked into the cake. We've already borrowed so much money and the interest on that debt is already soaring stratospherically. So we got a financial crisis out there no matter what. The second thing is that, or I don't know, maybe it's the third thing. Well, anyhow, the second thing is that Trump is an easy money guy. He likes low interest rates. And he already came out and said, I'm going to demand that the Fed immediately cut interest rates. And I think the rest of the world's central banks should do the same thing. So he, as a real estate guy, he knows that interest rates should be low all the time. And so we're going to have fairly easy monetary policy under Trump. And we're going to be throwing easy money basically into the everything bubble, the biggest financial bubble of all time, which is pretty damn inflationary when you think about it. So that's good for gold. And then we've got this thing going on with the tariffs in London, causing gold to pour out of the London markets and into New York. And two things about that. One is that if you try to buy gold on the London Metals Exchange now, there's an 8-week wait. And normally they have gold sitting in a vault. You buy it by using a futures contract or whatever, and they just go get the gold and ship it to you. Now they don't have it. So they're basically defaulting on 1 and 2 month futures contracts. That's a default in the metals exchange. It's a huge, big deal. And then the other thing is, to ship gold from London to New York isn't just put the bullion on a plane and fly it over. You've got to ship those bars because the two, New York and London, use different kinds of gold bars. So London has to ship their beautiful gold bars to Switzerland to be melted down and recast in the form that New York likes, and then have that be shipped to New York. So this is serious. This gold flowing out of London isn't going to just turn right back around and flow back into London out of New York. And that's spooking the gold market. So gold is now rapidly approaching $3,000 an ounce, which is a huge deal. And like you said, the gold miners are finally starting to catch a bid. So if you want to see what $2,800 gold means for the miners, just watch the next earnings season, which is underway now. The gold miners have to announce their earnings pretty soon, and they will have sold a lot of gold at very high prices. So some of those earnings are going to be pretty nice. And that's part of why people are buying the miners now, because they're anticipating some better than expected earnings reports. So here we go.
Yeah.
And by the way, the miners in this kind of a bull market usually do extremely well. And what also does really well is silver. In the last year of a precious metals bull market, silver goes straight up and its percentage gains double gold's at least. So this might be a time to be buying some silver if you don't already have a big, nice stack, which you should. I mean, who listens to your show and doesn't have a stack of silver? I've got West Red Lake on my Substack newsletter recommended list too. And a big part of that is that they're going to do the phase change now. Well, when you go from being an explorer or a developer to a producer, you've taken a lot of the risk out of the equation because you've proved that there is gold there and that you can get it out of the ground and process it. So once you prove you do that, then you're a producer, which trades at a higher ratio in relation to everything else about you. And so West Red Lake in the second half of this year is going to become a producer. And hopefully there aren't a lot of growing pains in the new, the mine ramping up and everything and the mill ramping up. But if it goes even reasonably smoothly, then all of their numbers were very conservative and they're going to be putting out some really good earnings reports by the end of the year. So here's hoping for them and a lot of other entities that are kind of in that class.
From a technical viewpoint, John Rubino analyzes Trump's approach to tariffs, viewing them as a strategic tool for influencing international trade rather than a revenue mechanism. He explains that Trump uses tariffs to pressure nations to align with U.S. interests, particularly by driving factory growth. Combined with stricter border control, this has boosted wages for American workers. President Trump's decision to close existing loopholes and exemptions will strengthen the United States steel and aluminum industries. In his first term, President Trump imposed Section 232 tariffs to protect the American steel and aluminum industries from unfair foreign competition. The steel tariffs that President Trump implemented led to thousands of jobs gained and higher wages in the metals industry. Despite the rise of tokenization, Rubino warns that fragmenting assets into crypto-based entities could fuel inflation by expanding the money supply. He predicts weaker cryptocurrencies will collapse while the broader financial system faces growing instability. Let's get back to the interview.
Trump is a transactional president, and tariffs are his opening bid when he wants something from somebody. So what he does is he sees a country who he wants to behave a certain way, and he immediately slaps tariffs on them. Since we're the biggest market for basically everything in the world, that is an existential threat to almost any country. So on day one, they're looking at an existential threat over here and maybe doing what Trump wants over here, and it becomes a no-brainer. They do what he wants. So he doesn't expect to replace the income tax with tariff revenue. What he expects to do is to use tariffs as a behavior modification tool internationally and then get things he wants from other countries. And mostly what he wants is for them to set up factories over here. So, from a working class point of view, Donald Trump is the best president ever, even though he's a billionaire who might not care personally about 40-year-old high school educated white guys or anything. But what he's doing by demanding that, it's the best thing that's ever happened for working class people because factories coming back at the same time the border is closed, by the way, means much higher wages for people who work with their hands. And it's about time, So that basically is, I'm not sure how much of this is part of Trump's plan, in his mind, but it's working out that way. He's using tariffs to impose behavior change on countries, mostly by making them build factories here, and that's helping working people. So as a process, it's excellent. I hope it keeps up.
Hey, so what do you think of the prospects of annexing Greenland?
Well, you elect a real estate guy, and you got to expect him to be out there trying to buy undervalued real estate. So two things about that. One is that what you're talking about is tokenization, where you basically slice and dice everything. It's like securitization, but instead you create some kind of a crypto entity that, and we're doing it for everything. And not just digital assets, but real world assets. By the way, real world assets is now a name for a subcategory of investment assets carved out because they exist. There's actually a category that are defined as existing, and that's their defining trait, because a lot of these other things do not exist, right?
And the metaverse.
The cryptos have no physical existence. And
Yeah, they're
so,
not worth the paper they're not printed on.
well, I don't know what it means for their value, but literally they don't have a physical existence, and yet they're investment vehicles and instruments and things like that. So what you were talking about, where everybody creates their own crypto and ties it to the dollar, means the infinite increase in the money supply. So that means spiking inflation for all kinds of things, and it'll be a lot of the low quality cryptos that just cease to exist. Their value will plunge to zero. That'll be their intrinsic value, and then a lot of other things will be caught in the kind of whirlwind that creates. So we're headed for a kind of peak complexity that is just going to be breathtaking, and nobody can predict how it's going to play out, except in pockets, if not all the way across the board, it's going to be incredibly inflationary.
According to several market analyses, there is a growing sentiment that a silver bull could be on the horizon in 2025. This sentiment is driven by factors like increasing industrial demand for silver in sectors like solar energy and electric vehicles, coupled with potential economic uncertainty and growing investor interest in precious metals. Given the current trajectory of gold, silver, and broader economic trends, how should investors position themselves to navigate the uncertainties ahead? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.